Okay. Can people on Zoom hear me? Put something in chat real quick so I can know if the Zoom's up and running. Sorry for the delay, y'all in person. We were getting the Zoom set up and perfect. Thank you, Jeremy. Let's go ahead and get started. Happy Wednesday, y'all. March 9th. Our agenda today, the usual, we're gonna have outperforming moments, sign in, have our presentations, a little recap at the end. I'm gonna bring up polos once again. So first thing, outperforming moments. I know there's a lot because we just had midterms. So, or still having midterms. Anybody?
On 2 of my 3 exams, I only missed 1 question for both.
Nice. Congrats. Another outperforming moment. Yes.
I aced my accounting test.
Getting A's here. Anybody else? One more. Yes.
I aced my economics test.
Nice. The quote for today is another one by Benjamin Franklin. He's got great quotes. Beware of little expenses. A small leak will sink a great ship. So little expenses, you know, when you go to the dollar store, well, $1.25 now, you buy a lot of stuff. It might seem cheap, but it ends up being like $100 and you didn't budget for that or expect that. So just a little advice and a quote to think about, especially during spring break. A lot of little expenses do add up. You know. Next, sign in. For those in person, scan the little code we have up top and you will be entered in the raffle for 2 winners, $25 gift card each. You do have to have your paid dues today. Let me thumbs up when y'all are done with that. And you might notice I've been adding like kind of optional little questions when you scan the QR code. They are optional, but they're always going to be short. I'm not going to ask you to type an essay. Now for dues. Today is the official deadline. The dues for 2 semesters, $40, 1 semester, $25. Take a quick photo or message me if there's any questions about this, but we accept PayPal and Zelle. Zelle is through our email. It's up there. Just type that out and it will work. Now for the market outlook with Anthony.
Good evening. Can everybody hear me on Zoom? All right, so here's our itinerary. We're going to go over our market, our selected earnings, some news, a random walk, and the market watch competition. We can see here our price change since last meeting. All markets are down, with the Nike down 7.71%, followed by emerging markets with 6.5%. Ethereum and Bitcoin are still down from last meeting, though I believe that has changed. Same as the S&P, I believe it bounced back today. Here's our price change year to date. The biggest decrease seen in growth stocks, followed by the NASDAQ. Here's our price change the last 12 months. We can see that S&P is up 9.1%, followed by growth stocks. The biggest decrease is the emerging markets at 17.7%. Here's our price change since last meeting for all our markets. We see that energy is way up at 8.6%, followed by utilities. Consumer discretionary is down 6.6%, followed by communication services. All markets are down except for energy. Energy is up 38.8%. Wow. Consumer discretionaries is down 20%, followed by communication services. Here's our sectors. Price change last 12 months. Communication services is down 6.9%. So here's our heat map. We see a lot of things happening, specifically in healthcare. You could also see that some of the banks are down. JP Morgan's down. So we got a switch up from last week. No crypto heat, but here's some of the cryptos that I follow. They may not be the most popular, but I think they have the most utility or functionality. Yeah, Solana, it's down 14% since last meeting. You got the Polygon Matic network, it's down 8% last meeting, and Cardino down 14%. Seems to be a pretty big theme. All of those are mainly used for NFTs and other little games. Here's our most anticipated earnings this week. I know CrowdStrike, I believe they came in really high, super high. I like Rivian on there. I really want to see what they're going to do. I don't know what that Real Good Industries is down there, but before we move on, I got to get somebody's favorite company.
DocuSign.
DocuSign? Anybody like Oracle?
Oh, yeah.
Children's place.
I'm actually,
Bumble?
I'm looking forward to Ulta because they kind of been doing the whole AR, the augmented reality for their makeup. So I'm kind of curious to see how that kind of affected things.
Can you say that name again, sir?
Ulta,
Ulta, okay.
Beauty.
Yeah, for sure. And so here's the earnings reported this week. You got Mongo, they beat on EPS and they beat on Rev. You got Stitch Fix, they beat on EPS, beat on Rev. A&B Industries, they beat. You have Bumble, they missed on Rev, or EPS, excuse me, they missed on Rev. And you have Casey General Stores. I don't know if that's like a Dollar General for up north. Here's our earnings for next week. I like that ticker free for Whole Earth Brands.
Seiko.
That's our CFA research team's talking.
And so this is kind of with everything that's going on, I thought it would be good to take another look. I know last week or the week before I presented a chart kind of showing all the major events and how they affected the financial industry. But as we can see here, with a lot of these, if you look at that 6-month column and that 12-month column, it rebounds. So I think, personally, I believe with the sentiment regarding the coronavirus and with the reported numbers coming in right now, I think investor sentiment is looking definitely positive in the future, despite what's going on right now. And so a lot of the story is Fitch downgrades Russia to C or triple C. And from what I read is they don't normally do that to, let's say, sovereign entities or foreign entities, but I guess it didn't add it in, but C means probability of default is imminent. So that's not looking good for Russia. Along with McDonald's, I believe Coke jumped on the bandwagon. Pepsi's on the fence. Starbucks. A few other internet-only companies are going away.
All the media companies,
Say again, sir?
CNN, like NBC, all the news are gone.
All their news are bailing out.
Something Apple too left.
Good luck, Russia.
And you know, it's crazy to leave that many workers there. Big problem. And so I've been wearing down my shoes a little bit. And so the chapter this week focused a lot on the internet bubble, kind of similar to the electronics bubble, just a bunch of internet companies, you know, they would slap it onto the name and kind of push up earnings. Also the way the evaluated companies changed during that time. They had it to where the NASDAQ tripled, I believe from March 1998 to January 2000. And then, of course, they touched on Enron, and if you want to be an intern there, I'm just kidding, but they went over the whole accounting gimmicks and accounting irregularities that they perpetuated. And of course, a lot of things changed after that fact when it comes to FINRA and the Securities Exchange Commission. And so here's our Market Watch competition. Please get involved. Please take a picture of this, of that link. I believe there's only about 5 people in right now, but come on and join. I've already been looking at what Anna's doing. I think she's going to win. She's doing some type of compounding strategy. There's another guy, Alex, he bought a bunch of oil. So that's where we're at right now. That's the password to get in, invest 2022. And then every Thursday, I'll be in the FSC at 4 p.m. if you want to join us and learn some cool stuff. Thank you.
Great job, Anthony. So today we're going to go over the February job report. We're going to take a look at some recent updates in Congress, mostly involving oil. Then we're going to cover the executive order on crypto that President Biden announced. Unfortunately, today I do not have a documentary recommendation. I'm going to be using my time over spring break to get as many as I can for the rest of the semester. But I will be linking a video that I'll talk about later in the Discord after this, and I think it'll be very useful. So firstly, the February job report. It's supposed to say 2022, I'm sorry. But the non-farm payroll rose by 678,000. And unemployment rate is down to 3.8%, or approximately 6.3 million unemployed persons. The United States still has 2.1 million, or 1.4% fewer jobs than they did in February 2022. So more than 300,000 people have joined the workforce in February. The amount of people not being able to work due to COVID has fallen by 1.8 million people. And then although a strong job report, investors were mostly concerned about the conflicts in Russia and Ukraine, and it kind of overshadowed the job report as far as market returns go. So right here, we have a graph of the payroll, as you can see, plus 678,000 jobs. And here's a graph we can see employment change by industry. So we see leisure and hospitality, professional and business services, healthcare, and construction among growing industries. Little change in utilities, information, mining and lodging. That was a big one in January. Little change there. But there have been 11.3 million job openings as companies are hiring more workers. There's recent rise in consumer spending in February and January of this year. But due to the recent gas prices rising, a lot of people are concerned that that might weigh into consumer spending, and inflation concerns might be lead to a decrease in that. So one big thing in February that people are discussing is the return to office for workers. Companies such as American Express, Meta, Citigroup, Wells Fargo, a lot of major banks are deciding to use March as their return to office. Mostly workers aren't too upset about that, but people think that a lot of people will leave their jobs to where they can work virtually or from home. So right here, we have 13% of people worked remote in February. And in January, that number was 15.5% of people. And then here you can see the job openings monthly, mostly on the rise. Here's the recession right here. So now we're going to look at some moves in Congress. The US decided to ban imports of Russian oil and natural gas. The exact quote was, "The United States is targeting the main artery of the Russian economy." This was in a press conference when he decided to ban the imports of Russian energy. So Russian oil will no longer be accepted in US ports. I'll show you a map on how largely that'll affect our economy later. And in 2021, approximately 8% of the US imports of oil, which is 678,000 barrels a day, was from Russia. So right here, we have a heat map and then a regular graph. We can see our imports. Canada is about 51.3%, Mexico 8.4%, and we have Russia at about 8%. So banning Russia, it will have some implications, but not as large. We are a net exporter of oil. But as we have seen that gas prices have been largely on the rise, I'll get to some exact numbers a little bit later. So there's some global sanctions going on. The European Union said it planned to cut imports of Russian natural gas by 2/3 by the end of the year. That comes along with the United Kingdom. They said that they would end Russian oil imports by the end of the year. And they're already 8% of the nation's demand. Some other sanctions going on right now is crypto. The EU said on Wednesday that certain companies and the people in Russia and Belarus are banned from trading digital assets in the EU. And then the European Central Bank is worried about possible loopholes in crypto for those attempting to dodge sanctions, mostly Russian oligarchs that they're fearing. And the US, I'll get into it a little bit later with their executive order on crypto. But most of this is coming as a way to kind of avoid loopholes from Russian oligarchs or people attempting to dodge the sanctions. So they're implementing more regulation on crypto. So here we can see a graph of Brent crude oil, often known as the benchmark of oil. You can see it's down 13.64%. We had a major increase early March. And then the price of oil, how that affects American households. You can see a graph right here of the average gas price. It was $4.17 compared to $4.11 in 2008. That number is not adjusted for inflation, but still it has reached a record level high. And the move was bipartisan in Congress mostly, but it'll mostly impact American households. So the recent increase gives more reason for the Fed to increase their interest rates. Date to look out for their next meeting, March 15th and 16th. And now I'm going to be getting into the executive order, ensuring responsible development of digital assets. So this executive order outlined the risks cryptocurrency posed on the economy, national security, and climate. The executive order was directed to agencies across the federal government to issue new regulations for digital currencies. Agencies are asked to review the possibility of issuing a digital version of the dollar. It's a pretty big move. I'll get in, when I said I'd send that video to the Discord, that'll get into the exact specifics. It's about an 8-minute long video that will detail exactly how that's going to work. But right now, from quotes from Jerome Powell, it doesn't sound like they exactly know how it's going to work. This is kind of an idea being tossed around right now. So the digital dollar, what we know right now is that the US over time has grown very dependent on cash or independent on cash. Cash is being used a lot less in recent years. And the Fed is considering implementing a digital dollar that bypasses the need for electronic payments that are slow and costly for business, essentially cutting out the middleman in a lot of it. It'd be a way to directly send cash to one person through blockchain technology and digital wallets issued by the Fed. So this idea, CBDC, central bank digital currency, the definition is that it's a purely digital form of a country's money issued by its central bank that people can use just like cash. So what would this look like? The digital dollars themselves would be simply computer code. They'd be stored in the same manner as cryptocurrency. Payments would be much more frictionless, bypassing extra fees and delays that you see when you transfer money through like Venmo, Zelle, things like that. And what I found most interesting, and the reason that I thought this could actually work, is it'd benefit the 8.4 million unbanked households in the United States due to the Fed directly issuing someone a digital wallet. They said for people that wouldn't have phones that they could download an app, they would issue them like almost like a flip phone kind of, that they would be able to like text a number and send people cash that way. You can learn more all about the specifics in that video I'll send right after this. But the government could directly send you your tax refund or stimulus payments through this digital wallet. You wouldn't have to wait to get it in the mail by check. So will this work? Not really. Jerome Powell said he was unsure about the specifics of it, but it's something to look out for. So that's all I have today. Unfortunately, no documentary recommendation, but if you'd like to connect, here's my LinkedIn. You scan this QR code, or if you have any questions regarding sources or anything else, feel free to contact me on email, or I'll be around after the meeting.
What's up, guys? Today we're going to talk about Google acquiring Mandiant, which is a cybersecurity firm, for $5.4 billion. To start off, a little bit of background. As we all know, Google is an American multinational technology company, and some of its services and products include a search engine, which has 3.5 billion searches a day, which is also a 92% market share of the search market share. Cloud computing, online advertising technologies, which in 2021 brought 210 billion, which is almost like 80% of Google's revenue. Software and hardware now with Google Home and phones and stuff like that. Okay, a little bit about his history. It was founded in September 4, 1998 by Larry Page and Sergey Brin. Together, they own approximately 14% of Google stock and control 56% of voting power. Now, in 2001, they weren't that business savvy. They were good computer science persons and they knew about information systems and stuff like that, but they weren't business savvy, so they hired Eric Schmidt to be the CEO from 2001 to 2015. Now, in 2015, Google was reorganized and became a subsidiary of Alphabet, which is the same year Sundar Pichai became CEO of Google, and then Larry Page on the left became CEO of Alphabet. Now, in 2019, Sundar Pichai became CEO of Alphabet too, so now he's CEO of both companies. And in 2019, Pichai got paid $280 million in stock compensation. Now, biggest acquisitions. First, Motorola Mobility. In 2011, Google bought phone maker Motorola for $12 billion. And in 2014, they sold Motorola to Lenovo. Do you guys think they made money on the sale or lost money?
Lost.
Yeah, they lost. So they sold it for $2.91 billion. And a few weeks ago, I talked about Cisco selling one of its companies, and they mentioned that they had aggregate revenue on that company, even though they lost money. And on this case, Google said it was one of the worst decisions they made. In 2014, they tried leveraging some of its patents, and they tried stopping Apple from selling iPhones, but it failed. So they just decided to sell it and focus on making software. Second one is Nest Labs. In 2014, Google bought smart home company Nest for $3.2 billion. In 2020, Google Home products brought in $7.5 billion in revenue. DoubleClick, which is an AdSense, like the AdSense company, they bought it for $3.1 billion. Looker Data Sciences. In 2019, Google bought Looker, a data exploration and discovery business for $2.6 billion. This company does kind of the same thing as Splunk did whenever I talk about Splunk. So it's big data. They grabbed a lot of data factors and then create information from it. They bought Fitbit in 2021 for $2.1 billion. Now, the last one I'm talking about is YouTube. YouTube is kind of important. In 2016, Google bought video sharing platform YouTube for $1.65 billion. And in 2021, YouTube brought $28.5 billion. Now, okay, the following chart is a chart that compares YouTube and Netflix revenue over the years. And this is important because I've been reading a few articles that mention the fact that Netflix has a lot of expenses from marketing to hiring actors and stuff like that. And YouTube doesn't have many expenses like Netflix has. And additionally, as you can see from the graph, Netflix growth is kind of not falling down, but YouTube's catching up pretty quickly. And In Q4 of 2021, YouTube brought 8.6 billion in revenue and Netflix 7.7 billion, which is kind of like I mentioned, like a switch. YouTube's kind of becoming bigger than Netflix. And also Netflix said that they were expecting to grow less this year, which is why also their stock plummeted that much. Now Google's growth, revenue, net income, and then we're going to talk about the growth in each. Okay, so on this slide, we're going to talk about how much they've grown in terms of creating revenue and net income. In 2019, Google's revenue was 161 billion with net income of 34 billion. 2020, even though it was a pandemic, everybody was on the phones and Google never ceases to stop working. So they had 182 billion in revenue with 40 billion in net income. And now for 2021, they basically beat every expectation. They grew revenue by 41% to 257 billion. And net income grew by 84% to 76 billion.
Very efficient.
Now, Mandiant. Mandiant is a cybersecurity company, which is the one they're buying, founded in 2004. According to Todd Bishop from GeekWire, Mandiant is known for its squadrons of security consultants and researchers who respond to cybersecurity incidents and provide the basis for the company's security technology platform. So like I mentioned, they're a cybersecurity firm. And in 2013, they rose to prominence because they implicated China in cyber espionage. They were the ones that were leading the research and the team that found out that. 10 months later, they were purchased by FireEye for 1 billion. And in 2021, they posted growth revenues of 21%. Now, why would Google buy them? There's a current race in which company is like tapping the cloud service industry. There's Microsoft, which Microsoft Azure, Amazon Web Services, and so these are like kind of the competition they have. They also have competition with IBM and Alibaba, but the biggest one out of them all is Amazon Web Services. Microsoft was also trying to buy Mandiant, which is kind of interesting. And another reason why they bought Mandiant is because recently there's been a lot of cyber attacks to different companies. On February 9, 2022, News Corp said they had an infiltration and Mandiant led the investigation. And once again, they suspect it was the Chinese espionage. They basically, News Corp is a news company, it says, but they basically infiltrated Google Drive and took a lot of the information from the company. And NVIDIA was also had a data breach like 2 weeks ago on March 1. And it was basically the same. They got in, they took some patents and processes and then leaked the information. So that's one of the big reasons they're trying to secure their firms. And additionally, a lot of articles were talking about, obviously, Russia also hacked some of the systems in Ukraine and tapped some of the communication things. So that's another big reason a lot of articles were saying that they bought Mandiant. Additionally, this is what Google said in terms of buying them. They wanted to improve the cloud computing business and improve their security operations and advisory services as well. Okay, now this is how much in revenue Google Cloud provided Google in these years, right? 5.8 billion in 2018, 13.1 billion in 2020, and 19 billion in 2021. And these are figures that even though they seem big, they're still relatively small compared to Amazon. Now, this is a picture that I was talking about how Amazon Web Services is the biggest one in terms of market share for the Google Cloud business. Then there's Microsoft, there's Google, Alibaba, and IBM, and they just want to tap more into the market. Now, price and Mandiant chart. Google is paying $23 per share or for 5.4 billion. In March 10, so a year ago, the Mandiant was going for about $20 a share. And like I've talked in the past, most of these companies start going down, but this wasn't the case. That much, I mean, it did go down, but not that much. And I think it was also because there's competition to buy it. Like I mentioned, Microsoft was trying to buy them too. So this is one of them, like we just have to buy them because it's critical for our company. March 7th, the day before it was announced, it was going for $18.75. And the day of announcement, it increased 20% to $22.49. Now, how did Google react? Even though this week has been a really bad week for the markets because of oil and the Russia war, Russia war. it increased 0.68. It did react good to the announcement. And this is a chart of the S&P, which was down 0.79. So they reacted good to the actual merger. So the merger was yesterday, actually. And that's it. Feel free to ask any questions regarding internship prep or questions about Google if you have any questions regarding Google. Perfect. Mr. Sweet now with the sweet spot.
So I thought everybody's talking about inflation and interest rates and oil prices and all that. So I thought I would show you this. Let me put this down so I can. Okay, can y'all see that? All right, so, whoa, what is that? Just hear an echo? I'm getting an echo. Okay, all right. So one thing I love to do is forward curves. So I want to bring some forward curves in. I don't know how many of y'all know how to do a forward curve in here? One person? No one else? Colin? All right, forward curves are magical. They're wonderful things. I like them for a couple of reasons. First, the market's telling you what they think the future is going to be. Hey, wow, hey, good to see you, man. I love when the market tells us what they think. The other thing I love about it is you can execute if you disagree with them. I love that a lot. So if you think they're wrong, you can put in a trade and bet against them. So what is the market telling you? Well, right now, this is a few days old. Right now, the 5-year treasury is at 174. The 10 years at 186. So they're pretty close together. But the market says there's a couple of transactions you could do. You could buy a 10-year treasury today and get 180, whatever, 186 for 10 years. You could buy a 5-year treasury to get 174 for 5 years, and then in 5 years, buy another 5-year treasury. And what someone says is, well, what would the 5-year treasury have to be in 5 years so that you're indifferent between those two trades? So if you're getting 174 for 5 years, what would you have to, the 5-year treasury have to be in 5 years so you're indifferent? Well, obviously it'd have to be much higher than 186, right? Because if you make 186 for 10 years, then for 5 years to make 174, you must have to make a higher number. That's called the forward rate. And that forward rate right now is 198. So if you made 1.74% for 5 years, and in 5 years, you could reinvest in a 5-year treasury at 198, you get the same return as if you bought the 10-year. All right, that's called the forward curve. Have y'all heard of the forward yield, forward rate, forward curve? It's pretty important. You can find it in Bloomberg, you can look it up. So what the bond market's telling us is right now, they think 5-year rates are going to go from 1.74 up to 1.98. What if you disagree with that? What do y'all think the 5-year treasury will be in 5 years? Higher or lower than 198? Higher, you think higher because of inflation? Anyone want to argue it'd be lower? Another recession? It got pretty low, didn't it, during COVID? So let's say you're right, and let's say it goes to, you think it's going to go to 2.5. The market thinks it's 198. What could you do? If you think it's going to go higher, what I would do is I would buy the 5-year treasury and I would short the 10-year treasury. So what happens in 5 years? You buy the 10-year treasury for $100,000. You short the 10-year for $100,000. So how much does that cost you? 0, right? 0 cash. 5 years, how much is the 5-year treasury going to be worth? Be worth $100,000, right? So what's the 10-year treasury going to be worth? You think interest rates going to rise a whole lot more than the market does. What happens if interest rates rise a lot in the next 5 years? What's the 10-year treasury going to be at that time? It's going to be worth a lot less than $100,000. What do? You get the 5-year treasury matures $100,000. You can then buy back the 10-year treasury for $980,000. You make $20,000. It's a really good deal. I love that. So he's going to go. You're going to do the trade tonight and put the execution in. I love that about markets, that you can actually execute a trade. Here's the formula. I can't see if I can make that formula so you can see it.
Some leverage, bro. Come on.
So what is that formula doing? It's taking the 10-year treasury for 10 years, dividing by the 5-year treasury for 5 years, and then taking it to the 1/5 minus 1. Essentially, that's the forward curve. It's a real simple formula. If you want to know how to do this, I've got some YouTube videos that walk you through it. Jacob's going to have to do it in my P&C class because we do it in there. It's a really good technique to have. Another thing's really nice about it is your first job, they need some forecasting done. There's a forecast for the 5-year treasury. At USA, we're spending, I forget, it's $3,000 a year for a forecast. And so they sent it over to my department. I looked at it and they were just, the forecast was just a forward curve. It's like, why are you spending $3,000 for someone to give us a forward curve? So we canceled that and we said, we'll just use the forward curve ourselves. So you can actually execute that. But what else can you do? Well, we also have this thing called TIPS. What's a TIP? Inflation adjusted treasuries. So you get a real yield, which is right now negative, and then at the end of the year, they give you whatever CPI is. So that must have been quite a little chunk of change last year and this year as well. You get at the end of the year, whatever CPI is, they add that to your principal. That's kind of nice. So not only is the bond market telling us what they think interest rates are going to be, they also are telling us what else are they forecasting? Inflation and real rates. That's pretty impressive as well. So what does the bond market think inflation is going to be? They think inflation in 5 years will be 2.21% over the next 5 years. Y'all believe that number? You think it'd be higher or lower?
I'm going higher.
Everybody says higher because everything's real high right now, right? I did this as of February. You think it's higher at March? This is a number I would be monitoring every single day if I were in business right now. Supposedly, I don't know this for sure, but Greenspan and probably even to today with Powell, that this is one of their number one things they monitor. And why is that? If the bond market is worried about inflation, doesn't matter. You know, what's that thing we say as kids? If mom's not happy, no one's happy. Y'all remember that? If the bond market's not happy, no one's happy. If the bond market is worried about inflation, the Fed's got some problems. Have you ever heard of the term bond vigilantes? And the bond market's upset, they can cause pain wherever they want to. And they're powerful. I forget the guy, famous analyst. I think he worked with the Clinton administration. He says, when I'm reincarnated, I'm gonna come back as a bond investor so I can rule the world and make everybody miserable. But yeah, they're powerful people. So if the bond market is worried about inflation, the Fed has some serious problems. They have to get ahead of that. So is the bond market worried about inflation? So a few months ago, they were pretty close to 2%. It's creeping up to 2.21. That's as of March 3rd. It's slowly creeping up. That's not what they think inflation is going to be the rest of the year or in 4 years. They say for years 6 through 10, they think we're going to average 2.21. Now, one big question you might have is how good is that forecast? What do y'all think? Is that a good forecast?
You made it.
Well, I don't know. I'm not a very good forecaster. We know economists are not very good forecasters. So what I did is I made some charts that I thought would be kind of interesting. It's kind of a complicated chart, but the blue line is the forward curve. So that's what they think the 5-year treasury is going to be 5 years later. So as of 1962, they thought in 5 years, in 1967, they thought the 5-year would be 4%. It was actually 6%. So how did I do in 1962? That was the year I was born. That's not why I picked that year. But the year I was born, the bond market was saying, wow, Ron Sweet was just born. Interest rates would be about 4% in 5 years. And boy, they were wrong. Interest rates were actually 6%. You could have made a fortune there. You could have bought the 5-year, shorted the 10-year, and you would have been very, very wealthy. How did they do it in 1970? In 1970, they thought the 5-year would be 8% in 5 years. What was it 5 years later? It was 8%. They did a pretty good job, didn't they, in 1970? I don't know why. Maybe pure luck. And then the actual rate actually got much, much, much higher. So what happened to their forecasts? Then they started forecasting much higher and they were completely wrong. Rates actually came down. It's a little hard to read that chart. You got to get used to, I'm lining it up. So in 1981, They thought the 5-year was going to be 15% 5 years later. What was actually?
6.
Only about 8%. So they really missed on that one. What could you have done there? You could have bought the 10-year, shorted the 5-year, and the 5-year would have come back. You would have to pay $1,000 for it. Your 10-year would probably be worth $1,200 or something. You would have made $200. If you've been right, don't you wish you had this chart in 1962? You could have made a fortune if you had this chart in 1962. It would be really, really good.
Hindsight is
What grade would you give them?
bad. Fail.
It seems like they're always behind the curveball, aren't they? Always behind. So rates are falling, and what do rates do? They fall much faster than they were expecting. Rates are rising. What happens? Rates rise a lot faster than expecting, and then they say, "Oh, well, they'll keep going up," and what do they come back down? So they're pretty horrible forecasters. They're better than economists, maybe, because I saw a study on economists just in predicting if rates were rising or falling. What would you think economists would get percentage-wise on that forecast?
50-50.
50-50 by 16. Yeah, they're right about a third of the time. So 2/3 of the time, you'd be better betting against them than with them because it's a really tough thing to forecast. Okay, what about inflation? How good of a job do you think they do forecasting inflation? I don't have as many data points because the tips don't go back that far.
It's got to be better, right?
You think it's better? Inflation is a little more stable, right? So there's inflation. What he knows about their forecast? Their forecast stays in a pretty tight range, usually around 1.5 to 2.5%. They haven't moved out of that range. Now, is that a good forecast? Well, I remember I tell students this. I remember when I was at UTSA about 5 years in, and someone called and said, our inflation rate this year, we're assuming 5%. And everybody's like, 5%? That's so low. How can we use 5%? Well, we're going to actually use 5% for inflation? You got to be kidding. That's the mentality back when I started my career. We were shocked that we're going to use a 5% inflation rate because it just seems so ridiculously low. Now we're pretty well set on that 2%, 2.5% rate because we think the Fed's shooting for that rate. There are people out there that are actually pushing for 5% inflation as a way to monetize the U.S. debt and kind of push all out, back on savers. But anyway, obviously they missed 2009 because, who's going to forecast a global crisis 5 years out? But, so here's what they're forecasting now for inflation. You can see that it's going up some. You can see that their forecast came down a bunch during the 2020 crisis. They were expecting really, really low inflation. This is the number I would be graphing. I would have this graph on my desk and have Bloomberg updated for me automatically and be watching that. The theory that I heard, I went to an inflation conference. Did you know there's such a thing as an inflation conference? It's a bunch of economists. I understood like 2% of what was presented there, but it was incredibly fascinating. But one of the presentations I actually understood was this forward inflation number. And that night at dinner, I sat at a bunch of Fed economists' tables. I knew Greenspan personally. It was really interesting. They were talking about their private lives, which was not so interesting, more kind of creepy. But what he told us was with Greenspan and Bernanke, if this number goes above 3, they're panicking. They will be putting on the brakes really fast. Are we getting close to 3? Not yet. But that's something I would certainly watch. When I was at UTSA, someone came over and said, wow, the forward inflation rate's well above 3 now. I haven't seen that. It was in an article that was published. I went and checked. I don't know how they got that number, but someone had calculated the number wrong. But I was like, if that's the case, yeah, that's the Fed would be raising rates 50 basis points, 100 basis points really, really fast. Because once the bond market says inflation is getting way away from what the Fed wants, the Fed's got to put on the brakes. So these are the numbers I'd be following, the forward curves. Practice with it. Bloomberg machine actually will show you the forward curve so you can calculate it yourself and then see if you can match it. You might be off a little bit because what I don't adjust for is the fact that bonds pay twice a year, and that's probably where I'm off a little bit. So you do have to do that compounding 6 months. So instead of taking the 10-year treasury for 10 years, I should take half the 10-year treasury for how long? 20 years, and then do half to 5 years for 10 years, and then take that to the 1/5 and then raise it to the one, So that's probably why I'm off a few basis points with what Bloomberg shows. I'm a little lazy in putting the numbers, but this is a great number to have. If you start at a firm and they need an inflation forecast, Who do you think is smarter, a student out of college 1 year or the entire US bond market? Where would you bet your money? I might go with the bond market. They have skin in the game. They've been doing this for years. If they're wrong, they lose a lot of money. I would just say, hey, why don't I just use the forward curve? And your boss says, what's the forward curve? So now you're the genius in the office. So, go for it. It's a really good way to do forecasts. All right, that's it for me. If y'all want this spreadsheet, email me and I'll send it to you.
All right.
Awesome presentations, everybody. Let me share the screen again. Let's continue on with our agenda. So a little recap of our social event we held with Scribble.io on our Discord for those who missed it. We did have quite a few people attend. We had JC and Diane, I believe. Not sure if she's here.
Yeah, dude.
But a little recap here. Our winners, our leaderboards are here. JC won. The link is JC. And a little 2 drawings are here. Does anybody want to try to guess what this one is? You all see my- yeah, this one?
Screw box.
A screw, yeah. And this one. This one was difficult.
I would party.
It's a toy. This was a toy. It was a fun event. We're hoping to hold another social event soon. This one would be in person. That's why I kind of asked y'all for suggestions, ideas on the sign-in QR code. So MDs will be looking into that. Look forward to that as well. And our next event here in April 9th. This is special and more unique, different than what y'all have seen from the Investment Society. But we got invited from the Business Student Council for a softball tournament. Is anybody here athletic? Has anyone played softball? Okay. Quite a few people. Okay. So we're looking for 10 people at least to represent the Investment Society for this. And I'm competitive. Y'all are competitive. We're going to win. We're going to play to win. So y'all have to train and be good at this, okay? I actually have Alina here real quick if she wants to come up to give you all more details because she knows a little bit more about this event than I do. So thank you.
Fight against faculty.
Gotta go hit some dingers.
Thank you,
Dinger.
Anna. So like Anna said, I am a member of the Business Student Council and me and a few other members are putting together this mini softball tournament. So it's going to be held on April 9th. It's a Saturday from 10 a.m. to 3 p.m. And so anybody is welcome to come as an audience member. However, those planning on playing have to be a part of either the Investment Society, the Business Student Council, the American Marketing Association, or Delta Sigma Pi. So those are the 4 organizations eligible to play. And so like it says here, the winner of those 4 student teams will be going against College of Business faculty. So that's really interesting. So we'd really appreciate if you guys could sign up. Like she said, we're trying to get at least 10 people from the Investment Society to show up. And we are going to be providing the players with snacks, drinks, and we're going to be selling College of Business t-shirts there as well. So there's the QR code if you wanted to scan it and fill out the Google form. Otherwise, if you have any other questions, feel free to reach out to me and let me know. Thanks.
Everybody should sign up or try to. I know I'm gonna hopefully play. I'm even gonna add cardio in because you run, right? Okay. So yeah, that's that. A new event here going on April 9th. I will be sharing it on our social media so y'all can remember and sign up for it. Next on our agenda here, promoting our classes. I updated the class schedule here, so my class is now at the bottom. It's not just like a sticker floating up top, but my class is on Friday, another promotion for my class. This class, upcoming class, I am holding it, and this time we're gonna be actually doing the coding and all that little fancy stuff. The first class was the setting up, the pipe portfolio opt and Anaconda prompt is what we're using, but I'm thinking for those individuals who still wanna join in on my class, and last minute, not really, I'm gonna make like a little document with steps on how to set up by yourself. And if you have any questions, you could reach out to me. But definitely join all these other classes. There's really great ones. I know some people are taking the fact exam. So Carlos has a fact exam review. And next on our agenda, if you already haven't, can you pre-order the polo here, scanning the QR code? I know we have more members than what I've actually received from the QR code. So we definitely want to get the right sizes for everybody here. but we will be purchasing them by this semester.
So you signed it?
Hope everybody scanned the QR code. If not, I'm also gonna send the link in the chat. And now for our gift card winners, a little drum roll here. For the first one. Juan Sanchez. You can come up at the end of the meeting. And our second winner, a little drum roll. Congrats, you too. Okay, so after the meeting. Nice. And join our network. I believe that's it for today's meeting. Have a great spring break. Enjoy the break.